Okay, very good morning here on the 5th of July 2019. Rishi Patel, co-founder, Master of the Markets, the Elite Traders Conference and the Traders Open Day. And a very warm welcome into the market update for today. As you know, for those of you that are regular subscribers, Master of the Markets here conducting a live review of all the positions taken for the week across both trading rooms. That's the live trading room and the Vedanta Elite trading room as well. And we're looking at an overall perspective of what is happening with the live markets and also what our performance has been for the week. And then, of course, we discuss a topic in the market update as well. Today's topic is variation 2 and 3, which is based around what we call market compressions here at Master of the Markets. And this is inspired by a forum that I am a part of, where I see a lot of people talking about sort of these charting patterns like cup and handle and head and shoulders and triangles and things like that. I mean, we don't personally use these types of patterns at Master of the Markets. We don't really believe in them. The reason for that is because we see them in a slightly different way. Which is as what we call a market accumulation phase. And I want to explain that in the education section in this week's market roundup. Let's start by looking at a live review of our positions. So looking through the Elite Journal and the Live Trading Room Journal, only one real position taken this week on the trading room, and that was on this euro dollar. A slight loss. Let's have a look at it. So you can see it was on the gold bar strategy just here. And the position, let's just take a look. The position was opened here on this seller bar, and we looked to take that long, and you can see it did accumulate for a few days just there, but then eventually it did push lower, of course, which is not ideal for us. I mean, we looked at this, statistically speaking, this red bar here, this is the first PSWB. First PSWB, as you know, for those of you as part of the Master of the Markets, is the first reversal bar that occurs in a phase, either top to bottom or bottom to top. In this case, bottom to top. This was the first reversal bar that occurred, and we found that 70% of these fail. So 70% of these fail, and so we wanted to capitalize on this. So we take an entry on our entry point just on the bar itself, and we're looking for a small upside for the bar to fail, and the failure is denoted by the high being broken just there. And in this case, you can see we held it for about 3 days, and then on the 4th day it went for our trailing stop. We didn't take a full 1% loss. We did manage to cap some of the downside, 0.94% loss on that one euro US dollar just there. So do bear that in mind. That was one trade that we did take this week, minus 0.94% loss, and that's why the title of the market update is such. We're seeing the euro dollar continue in an upward trend, a small retracement taking place just here. The pound US dollar, this is an interesting one. You can see the smart money indicator is telling us the trend is currently up, and the reason for that is because the last swing high has been broken. This is a very important break, because for us here at Master Markets, once we get a variation 5, and of course a variation 5 for us is a bar which goes ahead and turns, a set of bars that goes ahead and confirms a turning point, where I'm expecting this next turning point to be a higher low. So I'm not really expecting this to be broken just there. This will be a variation 5 setup, and on the cash-in strategy we would look to take that long. So currently we're in a variation 1. That variation 1 is about to finish if we get either a variation 5 or a variation 6. A variation 6 is a break of this swing low. So if that happens, then we'll tackle that accordingly. I mean, that will become a new downtrend, and again, not expecting for that to happen. So let's continue to monitor this into the next couple of days. Let's go over to the next currency, dollar against the Swiss franc. Again, a clear downward trend on this. We wanted to get involved on the cash-in strategy, but this bar was just a little bit too big, and we didn't have a reversal kick into play as well for us to get involved. So we're looking for another opportunity for this continuation of this downtrend, confirm swing high, and we'll look to take this a short one more time in the cash in strategy just there. So let's keep a lookout for that. Euro Japanese yen. Again, not really too much happening here. We've got again a confirmed upward trend, and the reason for that is because we've got a break of this last swing high again just here. So let's be on the lookout for this. Lot less volume in the market yesterday, and the reason for that is because we had the Independence Day yesterday in the States, so obviously national bank holiday, not really too much volume being traded across the markets, across the world financial markets just there. US dollar, you can see dollar Japanese yen making its move today to the upside. Let's take a look at the Aussie dollar. The Aussie dollar, of course, you can see just here that we do have a PSWB that kicked in just here. Again, first reversal bar, and you can see, look at that, that 70% did fail. This fell outside of our parameters for maximum open equity, and hence we didn't take that. But you can see that first PSWB did indeed fail just there. So that was that one on the Aussie dollar. Let us also look at some of the other world markets. A lot of news around the Bitcoin at the moment, which is pretty interesting. So let's take a look at that as well as some of the indices as well. So where we look at, let's take a look at gold. Gold has shot up recently. A lot of you will know that around about the beginning of this year, end of last year, we had a move higher on gold. So that is now in a nice clean upward trend. Again, long-term investment in gold seems to be wise. Many reasons for that. You can look back on our previous videos for why we've spoken quite extensively about that. Let's take a look at oil, 56.5 at this time. Again, it did push lower, but then again towards the beginning of this year has pushed much higher just there as well. The FTSE 100, these indices are all breaking new highs, which is interesting to see. Again here, if you look back at some of the history of the FTSE 100, we've reached as high as 7,800, 7,500 at this time. But if you look actually at some of the other indices, here for example the S&P 500, you can see has reached new highs just there. So really interesting to see that coming up to the 3,000 mark, and that is a very significant level just here. So Bitcoin again has pushed higher, hit the $13,000 mark from $3,000. So again, quadrupling an investment made just there. A lot of accumulation, but I didn't believe that this was the buy point really for Bitcoin, and I did mention this back at some of my videos. There are lots of gaps that lower down on this chart that need to be filled, and now if you look and observe to the upside here, again lots and lots of gaps which are being formed here in the market, which haven't been covered or plugged yet. So you can see generally speaking, when instruments reach a higher amount of liquidity, they like to fill these gaps, and this is the thing that I'm cautious about, so that if this does come back down to look to fill these gaps, then of course this would be a good opportunity to get involved in longer term investment potentially with Bitcoin. Let's keep watching and observing again that one just there. Okay, so let us move on to the topic of the week, which is all around market compressions. And the reason that I want to address this topic, as I said earlier in the market update, is basically because I see a lot of people that want to sort of use these ascending and descending triangles and things like that. And this is all fine, but I mean, I think we should do this with a level of awareness as to why things like this should continue to work, or why they do work or don't work in the first place. And it's important to have a base level understanding. So if we look at this on the Euro Japanese yen, for example, some people will call this a symmetrical triangle or whatever. I mean, there's so many different terminologies, or you can argue it's a descending triangle or whatever. I mean, it's really not important what it's called. What's important is what's happening in there. And so what all of this represents actually is what we call a period of market accumulation. And accumulation is the stacking of orders by the brokers, and these are both buy and sell orders. And then what happens is that as the stop orders stack up, brokers look to flush these orders out and then push the market in the way that the market makers then decide that the majority of orders are actually stacked in. So it's really interesting because you may look at this and think, okay, it's coming from a downtrend, and so it must break out to the downside. And so what people will do is they'll start to position their orders into these trades and look to get in on sell orders. But then, of course, what happens is initially the market looks to push higher first, and then looks to come down, and it's a bit counterintuitive to what you would expect to happen. But again, the market moves where the most amounts of stop orders are stacked. So if there are stop orders stacked up here, these will get flushed out first before the market makes its actual move. And this is all important to understand, that where the market moves is all based on these stop orders. So definitely do look to understand this, and we call this, at most of the markets, we call this a variation 2 setup. And a variation 2, quite simply, is if you look at the distance between swing high and swing low just here. So all I'm doing is I'm just tracking the distance between swing high and swing low. Again, look at the next one here. And then if you look at the next one, what you've got actually is this range is within this previous range here, and you could look at it and call it an insider bar, and it is an insider bar. That range is an insider bar to the previous range. And now you may not have thought about thinking about it in this way, but it is important, because the interesting thing is the same statistics stand. So whereas we know for a fact that only 10% of bars in the market that form are insider bars, it stands to reason, and it is actually true, that only 10% of the ranges are inside ranges in this way. And so if you look at it carefully, this is an important signal to let you know that accumulation, or the stacking of orders, is taking place. So this is important. Now, this is what we call a variation 2 setup. So a variation 2 setup, and that's very important again, because you need to be able to identify these periods of market accumulation, and we call them single market compressions. So where this range is within the previous range, we call this a single market compression. Now, what happens if the compression continues on and extends even further? Well, that's also an important sign as well, because that is the accumulation building up to an even greater extent. So we expect the breakout to be just as aggressive as well. If we look back actually on the dollar yen, there's a good example of market compression actually taking place. Let's go ahead and extend our swing highs and swing lows just a little further back. If you go back actually to here, this is a period of extended accumulation, which again could be looked at a descending ascending triangle, whatever you want to call it. But what it actually is, again, is a period of extended accumulation, and we call this a variation 3. Again, if you look at the range, so if we look at this one from here to here first of all, and then this one from this point to this point. Now take a look at the next one. This is within the previous range, and even the next range, this is even more important, is within the previous range. This is a double insider bar, and again, where you'll see on the market, double insider bars are very rare, and it's very rare to see them. And the fact that we've got that extended market compression is always a way of the market telling us that its accumulation has extended quite heavily. There's been a lot of build-up of orders, and then there needs to be obviously a profit release phase, and that's all of what you're seeing just here. So we're looking to capitalize on these moves using various strategies, and of course one of the strategies that we use in this extended market compressions is of course the prime profit strategy, which is one of the Vedanta elite strategies. So there are various ways of tackling this dollar Japanese yen in this way, in these variation 3 compressions. Because this is an extended market compression, i.e. it's got 2 or more of the compressions inside there, in EMC, we call this a variation 3. So this is a variation 3 for us just there. And that's also important to know. So these variation 2s and variation 3s are both market compressions representing periods of accumulation. And we look to see if we can capture the sharp and aggressive breakout in line with the direction where most of the stop orders will be stacked. So this is the market update for the day. That's the topic for there. I trust that that's useful. I look forward to speaking to you all soon. Until the next time, stay disciplined, follow your trading plan, keep trading like a master.